So how do people use their whole life insurance policies? I'm going to talk a little bit about our company's experience just in working with individuals when they're interested in a whole life insurance policy. What do they do with their policy? Beginning with step one, how do they maximize the cash value with respect to the funding? Usually we see a lot of flexibility, meaning someone wants the policy to be very flexible. They don't want it to feel like a burden and have a high bill. And then second, how do they use the policy? So the number one item is maximizing the cash value. And where we start there is designing a policy with a minimum premium, putting as much money as possible toward the paid up additions rider. That the short version of that is PUA rider. And that's how we maximize our cash value. In addition to that, we do prefer one of the major mutual companies. I'll say, regardless if you even work with us, make sure you're considering one of the four major mutual companies, Mass Mutual, Guardian, New York Life, or Northwestern Mutual, simply because we've seen them consistently deliver the strongest cash values to policyholders when we look at real policies, not illustrations, but real policies that have lived the test of time. So, regarding the policy design and that topic of flexibility, it's common for someone we work with to say, hey, I want the ability, Steve, to pay up to $100,000 per year. However, I do not want to receive a bill for $100,000 every year. I don't want this policy to feel like a burden. I'm attracted to the cash value benefits. Make it work for me to the best degree possible. So how we'll design it is setting it up with a minimum premium. Let's think of this as our minimum commitment. And this often includes what's referred to as the base premium, also a term insurance rider. We want to go as low as we can per the insurance company's limits that we're working with. And all companies have different limits. You'll find a lot of times with some of the top companies, you can drive that minimum premium to 10%. And if you're thinking 10% of what, how I like to explain it is 10% of the maximum amount you'd like to add into a policy on any given year. So if you said 100K is the max I can ever pay into this policy, it won't be every year, but I know I can get it into this policy some years and I want it. Well, what we would look at is a design that might look like this, 10% minimum premium, meaning you're committed to $10,000 per year. And then at your discretion, we've got UPUA, which stands for unscheduled PUA, paid up additions rider, where I could throw another $90,000 per year into the policy. This is optional. We also want to select a company and product that is very flexible, where you can add it at discretion. And different companies have different rules here, which we've got videos that provide a breakdown on PUA flexibility. That's important. If you're working with us, we're going to discuss that with you to make sure you can use the policy how you want to use it as the years pass. But in a case like this, I can add this much per year, the $100,000, but I'm only billed for this. Now it never feels like a burden. A lot of people like that idea. In addition to this, we'll see one say, hey, I don't want to have to pay premiums for my whole life. Can I set it up where I pay into it for something like 5 to 10 years, or maybe even less? I don't know upfront. The answer is yes. It's very common to see individuals, particularly real estate investors and business owners, not want to have to continue to pay premiums for a long time. Sometimes they continue to add money, but often we see one saying, I want to be able to stop at a certain point in time, let the cash value grow, and then borrow against it, repay. I've got a nice death benefit as well. Like that's a big point of interest that I have. So that's very common from the design standpoint, setting the policy up properly, making it very flexible, and then selecting one of the top companies. And then what we'll look at next is on the loan side of things, which is helping them use the policy. So if you want to use the policy for your business, for real estate, whatever it might be, what we're going to look at specifically is this. If you've got cash value, let's say it is $1 million. You got a nice bucket of cash value you've built up over time, and you see an opportunity where you want to take a policy loan for a piece of property. We'll say it's for your business, and you know exactly what you're doing, and you say, hey, I'd like to borrow $500,000 against my policy. What most people appreciate seeing in a case like this is this. What is the policy growth? Specifically, what am I receiving in total growth, dollars, from the insurance company when I look at the guaranteed growth and also any dividends? What's the net dollar amount that I received in growth? If it was a 4% IRR, which won't occur in the early years, it'll take a little bit of time to hit that. But if that's the case, what will that come out to? About 40K. And then if I've borrowed $500,000 and we'll assume the cost to borrow is 5%, what does that come out to? Well, now the actual cost is $25,000. And what a lot of business owners and real estate investors want to see is this. Show me year by year the total amount I've gained compared to the total amount I've paid. Because I don't want to put myself in a position where I've overloaned it and I see myself paying more in loan interest. And some people do for a couple of years, but they want to make sure that we're not in the red, at least, and especially not in the red for a long period of time. But that's a quick overview of how people will often set up policies to be very flexible and then use them on the back end. Of course, we've got the large life insurance death benefit there too. Death benefit proceeds are always paid out income tax free. And that often, for a lot of real estate investors, does offer protection against any outstanding liens, or if it's for their business, any outstanding debt they might have. There's a variety of benefits there. Hope you enjoyed this video. Let us know if you did. We'll talk to you in the next video. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.